Good morning, everybody, and welcome to this weekly analysis session for Monday, the 1st of May 2015. Hoping that you all had a pleasant weekend and you didn't get too wet. It rained a fair bit here in Melbourne yesterday afternoon, but managed to get a few things done in the garden, so hopefully you all had a good weekend. All right, 1st of June, first of the month. We had some economic data coming out of the US over the course of the weekend in terms of GDP. We've got a big week of economic data again coming out locally. So let's get underway and see what we found in the markets this week. First and foremost, our disclaimer: and the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making any investing decision based upon the general advice presented in any Elite Wealth presentation, please consider whether it's appropriate in light of your financial circumstances, and please consult your licensed advisor before acting upon anything contained herein. The disclaimer out of the way. The agenda for today, we'll go through and have a look at portfolio management, see where we are in terms of market risk at the moment, both locally and in the US. We'll go through a couple of reminders as well. So just recapping on some of the subtle changes that we've made to our trade management in particular. For those folks who haven't caught up yet, we'll go through and have a look at a few specific setups. I couldn't find too much on the market this week. I went through and did a number of scans, so it's really just giving us a bit of an insight as to, what's sort of happening internally within the market, if there's not too many scans appearing for us. And then we'll go through and have a look at some Q&A as well. So at the moment, the portfolio management, the benchmarking model here in the ASX at the moment, if you've all had a look at your charts, and you should be doing this every Friday once the market is closed to see what's happening with the market risk. In Australia, we are currently still in a moderate level market risk. So that means that our stochastic has dropped down below 80. We're between 80 and 60 at this point in time. And so that means that we need to use an 80% market risk multiplier. In the US, our stochastic is still well above 80, meaning that we are still in low risk, and therefore we are able to use a 100% market risk multiplier. So if we are considering our portfolio and we are trading just the Australian market, if you have a maximum allowable drawdown of 15%, that is a maximum value at risk of 15% in your trading plan under a low risk market condition, and you are trading solely Australia, then you are allowed to have 80% of that 15 exposed as value at risk. And 80% of your 15% means that allows you to use 12% across your solely Australian portfolio. If you are mixing 50-50 Australia with US, therefore that means that you're only allowed to use half that amount. In other words, 6% of your total value at risk can be allocated to the Australian market. If we have a look at the US market at the moment, we're still in low risk for the time being. The market over there has been struggling. It's been teetering this way and that without really any clear directional strength at this point in time, but we're still in a low risk market environment over there. So if you were trading just solely the US, then you would be allowed to use 100% of your maximum allowable drawdown, which for most of us is around about 15%. However, if you are splitting your portfolio between Australia and US, therefore you have to split that amount in half. So instead of being 15%, you would allocate 7.5% of your total portfolio value at risk and allocate that to the US component of your combined portfolio. All right, so back into the Australian market. We are at moderate risk there. For those of you who are still choosing to scale out, then you are looking to scale out at targets of 2-to-1. In the US, if you're choosing to scale out, again, you're looking at targets of 3-to-1. Just a reminder, with changes to our trade management aspects of our investing or trading, we're really looking to get those longer term type trades, so something that might go for 6, 12 months, or hopefully even more, depending on what the market conditions are doing. And so on the basis of that, rather than scaling out along the way, we're really trying to just be patient with our trades, managing them appropriately. And just a reminder that if during the course of your trade you do happen to have one of those price volume volatility signals go off, and you have found yourself to be fortunate enough to be in the presence of a trade that's treating you nicely, and you're up significantly on that particular trade, then there's certainly nothing the matter with taking some profits off the table, because remember, if you are going to get stopped out from that point of time, then the trade really needs to turn around and move 3 ATRs against you, which is a significant distance. And certainly if you've had the opportunity to take some profits, it would be a shame not to put at least a little bit of capital in the bank rather than allowing yourself to get stopped out with that wider stop, which is there intentionally to help us accrue some of those longer term trades. But certainly what the market gives you, the market can also take away. So just use a little bit of discretion, but a bit of common sense as well. All right, so let's go through and have a look at the markets now. So we'll bring up Beyond Charts, and the first thing we'll do is just go through and recap on our indices for the time being. So there we have our S&P 1500, the benchmark in the US. You can see of late, we really just sort of started to break out of a pretty much a level of resistance, just coming in through this type of level here where we've hit our head on the ceilings a number of times and looking just to break through a little bit there, but again, not very convincingly. Very small bodied candles, not a lot of clear direction through here, wicks or tails on the candles on both sides. Big down day during the course of last week, followed by an up day. So if we blended those two together, we'd end up with a bit of bullish price action there. We had GDP come out on Friday night, it was, and the market sold off on the back of that. So that's where we are at this point in time. We've still got some rising troughs throughout, which is encouraging to a small extent, but we're still just going to have to wait and see what's going to occur over this coming week. We have got some news coming out of the Eurozone as well. A lot of talk about Greek debt at the moment and what impact that may well have on the markets. But clearly you can see down the bottom here that our stochastic is still between 80 and 100, so we're in low risk. If we go through and have a look at the ASX, we talked about the ASX trading in a range after its very good start to the year. It fell out of that range. Since then, we've come back down to a longer term support level. Pretty much had a classic 3-bar turnaround at that particular point. We've just started, we had a close back up towards the 57.50, which we were talking about over the last couple of weeks, which would be a positive sign. It'll be interesting to see what sort of a lead our market takes this week in the light of a little bit of a slippage over there in the US. But for the time being, our stochastic between 60 and 80, keeping us in moderate risk for the time being. We'll keep an eye on this to see whether we do happen to move back up towards 80 or roll over back down towards the 60 level. Certainly, any time we get down below 60, there is a propensity for the Aussie market to slip away pretty quickly. So just keep an eye on your current levels of value at risk at this point in time. I've got some cancelled orders, which I thought we'd go through first and foremost. What I'll do here is I'll just go up to the pendings list, and we'll have a look at the Australian market to start with. Now, what I'm going to do here is just go through a couple of stocks and at this point explain why we've chosen to cancel them. So the first one on our list is TNE, and I don't know whether it's in... It should be in our pendings list here. Let's go through. If Beyond Charts will cooperate with me. A couple of stocks that we've been looking at recently from last week. There was one I was having a look at on the course of the weekend there. And another one I was looking at. TCL, that was one that triggered during the course of the week. Now, I'm not too sure. Perhaps I haven't got it. I might have already taken it out of the list, but we'll go and have a look at this one anyway. TNE is the stock that I refer to. It was in the watch list and it's been removed. So previous weeks we had a bullish candle setting up here. We had a nice medium-term trough which was well clear of any the second from last peak. So we represent a very good price action on that particular basis. But I've just chosen to cancel it. So you can all see that on your screens. What's the reason that I'm choosing to cancel this particular trade? There's something pretty evident about it in terms of the price action. What is it about this particular setup that is now giving us reason to cancel the trade? There's something about it. Awesome. Okay. Fantastic, William. Well done, Phil. And Mark. Excellent. So what we're looking at here, this last peak that's formed is now lower than the previous peak. So we've actually got lower peaks. All right. Now remember, when we're trading, and the sort of trading that we're wanting to do for the time being is have the best possible price action. So in terms of that, we're wanting higher troughs and higher peaks. We've just formed a lower peak, which, as you might remember, is the first signal, if you like, that we're starting to get some stagnation occurring. The other aspect of this, when we think about it, is now that we're in short-term downtrend here, then wherever this trough forms, now we don't know where it's going to form yet, but the subsequent trough in relation to the second from last peak, well, there's our last peak, there's our second from last peak now. This trough is going to be below the second from last peak as price continues. So on the basis of that, it doesn't meet our price action filter, so that one's being deleted off the list and cancelled from the watch list. The other stock that we were looking at as well last week was TPM, so I'll bring that one up. Good old Beyond Charts. Racing through here. Come on, I know you can do it. There we go. So there's TPM. So you might remember last week, very sort of similar sort of setup. We had a bullish candle confirming our short-term uptrend. Our price action prior to this was very, very good. But again, we've formed a lower peak. All right, so a lower medium-term peak. So wherever this trough, this subsequent trough happens to form, is it going to be at or above the second from last peak, which is now this one? No, it's not. So on the basis of that, price action's all over the place. It's looking a little bit weak. The fact that we do have the formation of a lower peak suggests that we might well be moving into, or that we are moving into some stagnation, so not MOTI phase, which is what we're looking for. So on the basis of that, TPM is coming out of the watch list under the pending side of things. In terms of orders that triggered last week, if I go back into my watch list, we had TCL, Transurban, triggered last week on this particular candle. So it triggered, I think it might have been on the Monday. Let's go and have a look. Last week. Yeah, that was the 25th. So it actually triggered on the 25th during the course of the day. Since then, having come back a little bit with some general sort of market weakness there. Difficult to try and find some new trades on the market at the moment, but TCL was one that did trigger, and the other one that triggered during the course of the week was the ETF that we were looking at, which was the Hong Kong ETF. So obviously we'd been talking a little bit about some of the performance of other markets around the world, some of the European markets performing very well, and some of the Asian markets in particular, China, Hong Kong and Japan, all performing really well, very, very strong of recent times. The only problems with our ETFs is sometimes they can be a little bit illiquid, but that one there triggering during the course of the week. The actual day that it triggered on was Wednesday. So you'll see here a little bit of gapping from the previous week, then Monday, Tuesday, Wednesday, piercing our entry level there, just coming back a little bit. So I'll just keep an eye on that one as we manage it. So that were the two trades that triggered in the ASX, and a couple coming off the list because of inappropriate price action. In terms of new trades for this week, there wasn't a lot that I could actually find. One that I've got in the pending list here and may well be up a little bit further. Is IZZ, which is a China ETF. Again, talking about those Asian markets. In terms of price action, our last trough well above second from last peak. We've only got to break our last medium-term peak to qualify as a trade entry. The risk on this particular trade, keeping in mind that we have to have our protective stop at least 0.5% below our most recent medium-term trough. So that has a trough. By the time we take that into consideration, it gives us a stop loss at around $60.07. A trade entry of $68.39. If I zoom out, just to make sure that we're not near any longer term peaks, etc. along the way there, we're clear of all that. So in terms of a potential setup, we've got one there on IZZ, iShares China Large Cap ETF. Again, just keep an eye on the liquidity for that. That's a locally traded ETF. There's not a lot of ETFs on the Australian market that give you exposure to overseas markets. That's certainly one. I think you'll find that does increase the amount of ETFs on the local market over the next few years, but certainly another way of getting exposure to ETFs around the world is to trade them on the US exchanges. So that's one that I came up with, and that's IZZ. In terms of other new trades for the Australian market, there was one other that I had in here, which was IAA. We'll bring him up. Come on, Beyond Charts. I know you can do it. It's Monday morning. There we go. All right. So similar sort of setup in terms of price action. Putting in a new trough higher than second from last peak. The stop distance on this one represents a percentage, if you like, of 10.2%, which is around the sort of guidelines that we've been talking about, somewhere around about 10%, give or take a couple of percent, seems to fit in pretty well. 10% is around about the average loss on trades. So, if we can stick to that, then, we're not going to end up with too many trades that have larger average losses than that. All we've got to do here is break past the medium-term peak. Price action, again, is very good, very strong. And again, no long-term peaks around to give us any cause for alarm on this one. So we have an on-stop order there at 71.02 with the protective stop at 63.77, which again is at least 0.5% below that most recent medium-term trough and outside of our two ATRs. So that's on the Australian market. Let's go through and have a little bit of a look, on the US market. So a couple of things I wanted to do there. We've got a number of trades that we've cancelled. And again, we'll go through these at the moment and see if we can find out what it is about these particular trades and whether or not we should be cancelling them. Come on, Beyond Charts. If you can't beat them, join them. There we go. We'll find another way to do it. So there we go. LAZ last week, nice strong price action. Trough coming in at or above second from last peak. Bullish candle, looking all good to go. But since then, last week, we've put in a fairly weak candle in that we've now got lower highs and lower lows. So it puts us into short-term downtrend. So if it puts us into short-term downtrend, that means that we've just formed a medium-term peak. The medium-term peak, which is just formed, is lower than the second from last peak. So from that point of view, price action again is weak, and on the basis of that, we're wanting the strongest price action possible. So that particular stock there is going to come out of the watch list. That's LAZ. This will all be reflected in the watch list, which I should be able to get out, I think, with a bit of luck, before midday today. So that should be reflective of these trades that are coming out of the watch list as well. RGA, we'll go and have a look at that one. RGA, in terms of what's just happened, why is it that this particular stock might come out of the watch list? We've got a trough that's been formed. We had an on-stop order above the previous candle, and the reason why we chose to have a look at this one last week was that the entry point, you might remember, was less than 1% above our medium-term peak. So we needed to establish some guidelines that we could use with a consistent basis for those setups where price had marginally passed our medium-term peak. So on that basis, then what we're looking at, and David's nailed it right in the head, is that our price action, again, is starting to weaken. So wherever this trough now is going to form, given that we are now in short-term downtrend, we haven't put in a lower peak per se, but wherever this trough is going to form, if it happens to form here or further down, where is that trough in relation to the second from last peak? Well, there's our second from last peak. Our trough is now going to be below that. So it's showing that on the basis of that our price action is inferior, and we're really wanting the strongest price action possible. So that's RGA. Next one on the list that I was looking at, and with a bit of luck, we'll be able to do this. CSL. Okay, there's CSL. Let's put on our ETC swing chart. Similar sort of behavior occurring here, in that the previous week we had a short-term uptrend, we had a medium-term uptrend, we had a long-term uptrend. Our price action was good last week because the trough was at or above second from last peak. So that was nice and clear. Since then, last week, even though we've got a white candle, we've still got lower high and lower low. So we are now in short-term downtrend, which means we've just formed a lower medium-term peak. All right, lower medium-term peak, wherever this trough is now going to form, is certainly going to be below the second from last peak. So on the basis of that, CSL is coming out of the list as well. Other ones to come out of the list. DPZ, Domino's Pizza, was one that we had a look at previously. Same sort of thing. We had a good setup. If we ignore these last two candles, everything was looking pretty good. Unfortunately, price action as it is, we've now put in a short-term downtrend, so therefore we've now formed a lower medium-term peak. Poor price action, so that's coming out of the list, and we're just going to wait until we get those stocks that are setting up with the best possible price action. So really what we're thinking about now is trying to find reasons not to be in the market, and our price action will help us do that. So only the best price action, and that's why we use it as a filter, will help us to cut down those lists of potential opportunities, and sometimes there can be lots of them. FDP was another one that we were having a look at previous week. It had a big sell-off. It did put in a bullish candle through here, so it was something that we could have had a bit of a look at. It had a lot of work to do to get back up to its previous medium-term peak. Couldn't muster up the energy. We've now put in short-term downtrend, formation of a lower peak, and on the basis of that, that's going to come out of the watch list as well. Another one, Genpact. Again, similar story here across the board, where we've had bullish looking setups with some nice strong candles, really good price action, but last couple of weeks, even the prior week, we were still in short-term uptrend. We did have a more bearish type of candle with the black body, but last week, gapping down a little bit there, closing certainly much lower, short-term downtrend, formation of a lower medium-term peak. So the price action again doesn't fit our filter, so that's coming out of the list. HXL, another one that we looked at, similar story again, nice bullish candle, good price action the previous week. Subsequently, putting in two fairly weak weeks, given what we're looking for and what our scans are looking for. They're looking for stocks that are outperforming the market, and the way that we pick that up, particularly when we're looking on the screen, is our relative strength. The relative strength is built into our particular scans. So I like to keep my charts nice and clean when I'm looking at my setups. Unfortunately, last 2 weeks on this have been fairly weak, and as a result, poor price action, HXL is coming out of the list. MSFT was one that we discussed last week. Microsoft, again, there was a longer-term peak through here. It was a matter of whether we'd got within 1% of that level, and we had. Certainly this stock was going to need to do a lot of work to get up to that long-term peak level. It still fit our criteria in terms of price action last week because our trough was well above the second from last peak. We had the nice bullish candle. Would have had a lot of work to do to get up to our longer-term peak, but since then, two weeks of fairly benign price action. It's coming out of the list. We've put in the lower peak, poor price action, and that's what we need. We need not poor price action, but good price action. And the last one from the list that I had was CLGX. It was one from a few weeks ago that we'd been having a look at. And again, exactly the same type of formation occurring where we'd had a trough put in, trough well above our second from last peak. But unfortunately, subsequently, we've put in now a short-term downtrend, meaning that we've had the formation of a lower peak. So the price action again is void. So they were the cancelled orders from this last week. They'll be reflected in the watch list for this coming week. A couple of orders that did trigger was Carter's Inc. Again, a bullish candle from the previous week. We've got the little green dot there signalling that. Short-term uptrend, nice high trough compared to second from last peak, triggering, and a nice strong candle as well. Ken's asked me a question, what about the open trades that are showing weaker price action? And he's saying sell and cut the losses. Absolutely not. We have our trade management procedures in place there, Ken. We've got our stop losses in there, so we stick with our guns, we stick with the stop losses. A candle or two of poor price action does not constitute the end of a trade. The end of our trade comes when we've been stopped out or you've chosen to take some profits along the way. But ultimately, we are looking for longer term trades, so we just need to be patient. We're medium to longer term trades, and so from that point of view, absolutely, Ken, as you just typed in, stick to the rules. Absolutely, the only thing that's going to keep you from absolute shellacking in the market is sticking to your rules. So most importantly, your trade management rules, so making sure that you're patient, you're disciplined, and you don't waver in the way that you implement those rules. Your position sizing, so that's taking care of your risk management, and just being patient. There's not a lot more that you can do. Okay, the market will give and the market will take away. You've just got to make sure that it doesn't take more of your money than what you should let it. So CRI, that was one that triggered during the course of the week. Another one, EFX, was a stock that also triggered during the course of the week. Just marginally being pipped in on the 28th there. So again, would have been nice to see perhaps a little more significant body on our candle. The fact that we've had price move to the downward side, move back up, at least given what the rest of the market has done, and particularly on the Friday last week, is hanging in there okay. So that's EFX. The other one that triggered was CE. Celanese. So we'll go through and have a look at that one. And that one closing with a reasonably nice candle as well. So they were the ones that triggered during the week. The only ones that I could really find during the weekend, and I scanned a number of different scans to try and see if I could find anything using both loose and tight scans. One that came up was MDSO. So I'll just bring that one up now at the moment. In terms of price action, we formed a trough which is clearly at or above second from last peak. If we zoom out just to see whereabouts we are, we do have a long-term peak coming in around about the $68 level. And so what I've done here is just put in this green line, which is around 1% below that long-term peak. So that's a long-term peak, or a place that we would need to consider perhaps taking some profits or being mindful of. is at around that 67.52 level. So we actually can, in terms of risk to reward, can squeeze in a trade up to that particular level. You just need to be mindful that our long-term peaks do represent a major point of supply. And on that basis, we're likely to, once we come up to these particular levels, we're likely to see that supply coming into the markets. All the folks over here that perhaps didn't get out before, looking for an opportunity to exit, given that they failed to take their profits along at this point. So should that opportunity come through again, there's every likelihood that they will remember and look to do that. So we may get some sort of stagnation at that level, but certainly, given the fact that we've got at least 1-to-1 in there, does represent an opportunity. The stop on that is getting out there a little bit. It is 12.9%. As I said, we're trying to keep it around about the 10% level, but just just presenting an opportunity there on the basis of price action, a good setup. The only thing that we need to worry about there is the long-term peak. So that's on MDSO. So if you're looking to enter that one, you'd be looking at around 58.99 on stop. That's 2 pips above that medium-term peak. And your protective stop at 51.37. And you just need to keep an eye out for around that 67.50, 67.52, because you're coming up to that longer term peak, which may impact on that particular trade. So that's MDSO as an example there. The other one looking at was ULTA. ULTA, Salon Cosmetics and Fragrance. So we've got an opportunity there on this particular setup. We just zoom in a little bit. In terms of our price action at the moment, in terms of troughs, well above second from last peak. Our peak here, you'll notice that this last candle is actually closed, not closed, but price has moved through our last medium-term peak. So again, what's the rule that we can use? We just need to make sure that it hasn't moved more than 1% above our medium-term peak. This last candle, price did move up past that last medium-term peak. It didn't move greater than 1%, so it does meet our rules in terms of that. The last candle, not terribly convincing. We've really got a pin bar that's sort of going the other way. Again, representing a little bit of weakness in the market. Still a white candle, so we still had a little bit of demand coming through at the end of the week there. Certainly, what you will find from time to time is that when you have a pin bar facing the opposite direction, if price does eventually close back above that pin bar high, then all of a sudden you can actually get quite a quick movement in the upward direction, as all those at this particular point who were selling through here realise that they're wrong, look to cover themselves, and you can actually get some quite quick moves to the upside. Having said that, this has still got a lot of work to do, given what the market did on Friday, to move upwards. But in any case, in terms of actual percentage risk on the trade, you're looking at around about 8.5%. So that would have a stop loss at 146.21 and an entry level there at 159.87, and I'll pop that one into the watch list, and we'll keep an eye on that one to see what happens. That's about all I had in terms of potential opportunities for the week. Guys, over to you. Did you manage to find anything that looked okay? All right, let's have a look. Macquarie, yep, Macquarie. Williams typed in Macquarie still looks good. And we'll go back to our ASX pending list. And TCL triggered. Might have been the other way. EPW was one that I was having a look at. PPT, this is one that we looked at last week. Again, moving up nicely. That order is still certainly still current and still relevant, so just waiting on that one. Ramsay Health Care, at this point, we're still in short-term uptrend. We've put in a higher high, and we've certainly got a higher low. Not a terribly good candle last week, with a bit better performance over the next week or two, looking to pass the last peak there. Okay, there's Macquarie. So we had a bullish candle a couple of weeks ago, which is when we were looking at it. Since then, we've had an inside candle, and last week, just starting to move back upwards again. So if we can get past that medium-term peak, then that's looking good. William also had DLS. So let's go and have a look at that. That's Drill Search. DLS. All right, so let's put on our swing chart and have a little bit of a look and see what we can see. All right, so in terms of our price action, is our trough at or above second from last peak? Yes, it is. And so we'll just put on some lines here just to go through this. Our horizontal line will give us a clear indication. So that ticks the box. So what else are we looking for in terms of ceilings on this particular trade? So we're really either looking for a long-term peak or a long-term trough. So in terms of long-term peaks, the highest point between medium-term uptrend and medium-term and downtrend. Then we can have a look at this area up here. So certainly medium-term uptrend, medium-term downtrend occurring. The other aspect that we need to be looking at is whether or not there's any long-term troughs around. So we'll scroll out and have a look and see if there are any of those that might impact on this particular stock. Doesn't seem to be anything too immediate. So the next thing that we need to start thinking about in terms of opportunities on this setup is what would be the risk on this trade in terms of where our protective stop needs to go, and is that going to be within our parameters? And I think, William, just having a quick look at this, I think you'll find that our last medium-term trough, if I put the value line on there, our last medium-term trough, the low is at $1.05. So if I get out the calculator, $1.05, and we'll go through this if I can bring my calculator over. So 1.055, and we need to be 0.5% below that, multiplied by 0.995 equals $1.04. So I'll pop that into memory store. So that's where our protective stop needs to be. Our entry point needs to be 2 pips above the high. So our high there is $1.30. So we're looking to get in at $1.32. So 1.32, take away our protective stop, and we get 27-cent stop on this particular trade. So whilst the price action is really good, that 27 cents out of $1.30 is a really wide stop. We're looking at a 20% stop. So that's the main reason why this one didn't go into the watch list there, William. It actually looked pretty good in terms of price action, but just a really, really wide stop. Certainly in terms of risk to reward, yeah, it ticks the box. I just wanted to see those stops, not quite so wide. It does mean that the stock's fairly volatile. But, in terms of having a rule, just trying to keep them around that 10 to sort of plus or minus a couple of percent. But in terms of price action, yeah, it looks really good. Still looks good. US stocks, Bio, Red Labs, Bio, and Blackstone BX, please. Okay, so let's go and have a look. BIO, Bio, Red. So let's have a look at that one. All right, let's put on our swing chart and have a bit of a look. Just want to see where this one is. Yep, looking very good. Looking really strong. Price action on this is looking quite good. This is something that, if we can get a bullish candle through the course of this next week, would certainly start to meet our price action filters absolutely. So if you can imagine a candle coming in, turning this short-term trend around to the upside, then certainly that would present an opportunity. That would mean, therefore, that this last candle here we're looking for this to form a medium-term trough, and if it does, then our price action filter is absolutely going to get the boxes all ticked. I'm not worried about the $150 level because I'm not convinced that round numbers in the longer term make a huge amount of difference. Some do, some don't. But other than that, this is just one to keep a bit of an eye out for next week. So again, what we're really wanting to do is we're wanting to make sure that we've got all our trends in the right direction. At the moment, This is certainly short-term downtrend, so that's the reason there. Other ones there, Blackstone, which is BX, I think. So I'll pop that one in. We'll have a quick look. Yeah, this was one that triggered a couple of weeks ago. It's in the watch list currently. So again, it's moved up. It's come back. It's looking as though it's trying to find some support level at this previous medium-term peak. So it is in the watch list at this point in time. Our original stop is still at 39.26, just waiting for our trailing 3 ATR to come up, and therefore that will then replace our initial stop, and we'll continue to manage that with the 3 ATR. So that's on that one. Kim, Starbucks. Yeah, okay, excellent. Let's have a look. SBUX. It was one I did have a bit of a look at. In terms of the price action, again, for the time being, looking really, really strong. Great looking chart. 3 ATR. Again, when the trend is really starting to accelerate, the 3 ATR is really nice in that it lets us stay in those stronger moves, and some of these pullbacks, etc., are not affecting us. And again, same through here, been really, really strong, going up really, really nicely. The only point that I would make on this one at the time is just in terms of our price action, representing really good price action. What I'm wanting to see, again, is the trough forming at or above the second from last peak. What I'd like to see in trades, and certainly depending on your own risk profile, etc., I really like to see the bottom of the trough coming in at around those last medium-term peak levels, because it does represent a really strong price action, a really, really strong demand. Certainly, those of you who are a little bit more aggressive in your and a little bit more experienced in your trading, the price action filter that we used to apply was the close of the candle that formed the trough at or above second from last peak. So this one would certainly tick those particular criteria, and certainly a non-stop order above those particular levels. It looks really strong. So that's the comments on that one there. Kim, you also had, if you look at the close of the candle last MTT, yes, that's right. Glenn, can you clarify what rule you are going to use going forward? Yes, absolutely. Okay, so the rule I am using for all trade setups that will come as part, that will be on the watch list and as part of the scans and the ones that I will present to you, will absolutely have troughs at or above second from last peak. Okay, so what I will be presenting is setups where that last medium-term trough is at or above the second from last peak. Okay, so hopefully that's answered that one. Colin has got something written here, found on.xnas. Okay, well, let's have a look. ON. All right, so let's put on our swing chart. Let's just zoom out for a moment and see where we are. That's way back in 2007. We've got those levels coming in at the moment, which would be interesting to see what's happened there. We've already tested those, so that's good. Let's zoom in and have a closer look. In terms of price action, I think you'll find here, Colin, that when we've got a stop loss at around the $11 level, and we've got entries above 13, you've got $2 on a $13 stop. Just roughly, so I'll just go through there. 2 divided by 13, and we're getting out there. We're getting out to 15%. In terms of price action, yeah, price action really clear. Last trough at or above second from last peak. No problems with that. And all we need to do is place a non-stop order above our last medium-term peak. There, the last high, 13.31, so we'd have on stop at 13.33. Last candle 13.33. So you've on stop. We need to go 2 pips above the high there of that particular candle. So 13.35 if you were going to do that. The only problem is the stop on that one's a little bit wide. That's the only reason there, Colin. Andre, is it worth trading US CFDs long term? Holding fees would be high. At the moment, the depending on which broker you're using, but typically your financing fees are generally the cash rate plus a couple of percent. So if the cash rate in Australia is around 2% and you're paying an extra couple of percent on top of that, you're paying around about 4% per annum. So if you compare that with your traditional margin loan, it's likely to be a little bit less than what your margin loans are. I don't think it's going to make a huge difference. It's going to depend on obviously what happens with your stock. If your stock goes nowhere, then that 4% can chew into your potential profits along the way. But if you're picking something that's got good relative strength, outperforming the markets, is in alignment with all its trends, etc., then I think your financing costs are actually pretty small in comparison with the potential outcomes. Certainly, if you've got a stock that's going sideways for a period of time, then you may well choose to invoke, your discretion and say, well, look, this stock's not going anywhere compared to some of the other stocks I've got in my portfolio or some of the other opportunities that are coming up on the scans. So therefore, why waste my financing costs on something that's just stagnating and going sideways? I'm going to look for something else to put my capital into. You could do that. I don't think the financing costs are overbearing that would stop you from doing something like that. Again, you need to just make sure that you're not taking on more risk than what you should across your portfolio. Mark had a couple there. CI, FSL. Yep, so let's go through some of those. CI was one that triggered, I think, during the course of the week. Yep, CI triggered, so that's fine. FSL was one that we had a look at a couple of weeks ago, and that's actually... That's one that did trigger. It had slightly wider stop than I would have preferred, but that's exhibited really strong price action as well. So that's moving in the right direction. A good week last week, so certainly if you're in that one, well done. You'll see now that it's started to move up strongly. It's starting to pull up that trailing 3 ATR as well. So just be patient, let the 3 ATR come up, and then let that be your guide on managing your stop. HZNP was one that we had a look at as well. And triggering last week on that one, fairly wide stop on there, but last week, its candle wasn't too bad, so that's starting to look pretty good. Interactive Brokers, that one's been in the list for a while, IBKR. So that one triggered a few weeks ago there, moving up. Really nothing to do with that at this point in time. Just be patient. Your trailing 3 ATR is now just coming up just above where your initial stop is, so that's a good sign. Just need to be patient and let the market do what the market does. J Blue. Sounds like an airline, I think. JBLU. No, that's not it, David. Type it in properly. JBLU. JetBlue Airways. Okay. All right, so a stock that's obviously been performing pretty well over a period of time. In terms of trade management, this is one that I haven't looked at previously. In terms of price action, it's been fairly reasonable through here in terms of these troughs coming in at or above second from last peak on a fairly regular basis. So it's looking pretty good. Has retraced a little bit of late. Certainly be looking for, given what it's been doing with its price action levels over recent times, you'll see through there that every time it has formed a trough, the trough's been at or above second from last peak all the way through. So it's certainly exhibiting a lot of those really good characteristics that we like. It's sold off pretty hard the last couple of weeks, but it's starting to find some support at this previous level. So other than that, you just need to manage the trade accordingly. It looks pretty good. Mark Dolling had Hum. All those that were in Hum. All right, let's have a look at Hum. HUM. Humana. Wow. That looks pretty good. So if you happen to be in that, the nice thing is that look at the 3 ATR on this. When it's had those steep moves up, it's dragged it up very, very quickly. It's paused and it's taken off again. So that's just, if you're in that trade, fantastic. Well done. Certainly in terms of price action, previous history of price action's been good. That last trough, well above second from last peak. that's a fantastic result. So again, if you're in that, well done, pat yourself on the back, and keep doing, keep following your trade plan, and let that ATR tell you what to do. Keep it simple. Ken says, I had the same questions. Some of the US Open stocks aren't moving very much. No, they aren't moving very much, Ken. And the reason for that is that the US market is not moving very much. We had a look at the index at the beginning there. It's been very much hard work. It's been a hard grind at this point. There's not a lot of trend direction in terms of overall strength, etc. You've seen that some of these stocks that you've been looking at that we've gone through today have actually shown some fairly strong price action. Not all of them, and you're going to get some that they pause at various moments along the way. We just need to see what's happening with the broader market. But they've, the ones that are coming up in your scans have shown that they've got good relative strength. So it's just a matter of being patient, and as the market starts to pick up, then if they've still got the same relative strength, then they should start to regain their momentum once again. All right, guys and girls, I don't have anything else for the rest of this week. That's all the questions, etc. I should have this watch list out a little bit earlier this week. Don't forget just go back to the PowerPoint just for a quick recap. Don't forget the education session. I ran an education session last week. It was on the relative strength comparison, so it was having a good look at how that indicator works. Again, the purpose of the education sessions is to not just to recap on what we're teaching you as part of ETC, but also to provide a bit of an opportunity, if you like, to provide some extension, a little bit of trader development along the way. So certainly last week talked about the relative strength comparison, the concept of momentum. And these are important concepts as well, because in the 1st of July, we are aiming to have out our ETF-based strategy, which uses that type of concept. So relative strength and momentum, amongst a number of other indicators that we look at as well. So that's a little bit of background for that. If you haven't had the opportunity to watch that education session, if you go through and watch that, then that'll make certainly a lot more sense when we come to talking about ETFs. Don't forget your price action for all your trade setups, your trade management, trailing that 3 ATR once it comes up and passes your initial 2 ATR. Remember, we are using soft stops, so on your initial setting of your stop, it's a soft stop. So soft stop rules apply. So if your initial stop, your soft stop happens to be penetrated, then you need to take action, and you need to change that soft stop or convert that soft stop into a hard stop. That's it for this week. I've got a question from Phil. Public holiday next Monday, which I think might be the Queen's birthday. So it'll certainly be a holiday down here. What I will try and do is perhaps come up with a watch list or something like that, or put together an abridged version, perhaps a recording or something over the course of that weekend for the Monday morning sessions. But I'll make an announcement on that a little bit later in the week. All right, guys, good luck with the markets this week, and we'll catch up with you next week. Bye for now.